Today we're going to talk about developing an extreme focus for one good trade in our 50 pips a day trading plan. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. A great start to the week yesterday. Some fairly good trades on most of the pound cross pairs. Today we're going to be talking a bit more in depth about developing extreme focus for one good trade in our 50 pips a day approach to the British pound crosses. Now, I've received a ton of questions and I'm going to do my best to keep working through all of that information. Just to reiterate, each day we will cover the basic structure and layout to our approach to the markets. So if you've missed any of the other videos, if you've gone back and you're trying to figure out where to start, each day I review the same simple things: the importance of structure, the pattern of the trend. Do we have any bigger geometrical patterns in place? A three push pattern, a head and shoulders, a reverse head and shoulders, a double top, a double bottom, an ascending triangle, a descending triangle. Do we have a trend line break and a retest possibly happening? These are just basic geometrical structural patterns that can occur over one day. They can occur over multiple days. They can occur over the course of the week in a 3 to 4 day setup. So again, structure. That just gives us the opportunity to assess if there's a bigger geometrical picture that we can be targeting for a measured movement of that range. Typically in a larger structure, I will target 1 times the full distance as a minimum of that range, as opposed to possibly just going for 50 pips or whatever that target may be. The next most important area that I pay attention to each and every single day is the high of the day and the low of the day. Now, in particular, we like to look at yesterday's high and yesterday's low if we are indeed trading inside of that range, because that can give us a lot of information if we're trading inside of the high and low, or if we indeed have broken one of those boundaries and we are, again, we talk about 3 things that markets do. They break out, they pull back, and they continue. So if a market was to break through a previous day's range and fill more orders and continue, we would term that a trend trade. If the market was to break out or violate that by a marginal new high or low and pull back and reverse, we would call that a false break reversal. If the market was to break out, test that boundary, double zeros the previous day's high or low, and come back and trade inside of that range, we would call that a range-bound market. Those are the only 3 things that markets do. So the high of the day and the yesterday's high and low, today's high and low, are important information, because that's where the market potentially may give us information about entering into the market with asymmetrical risk reward. We particularly want to target the equity opening times. Now, we're going to continue to keep going in depth a bit more. Traders have emailed me asking about the hourly rotation and the equity opens, how that ties in. It's really important. We're going to kind of touch on that again today. And then the importance of round numbers, 50s and double zeros. If you've been following me long enough, now you've seen enough of these trades that 90% of these trades will come off of numbers or the high and low of the day, and sometimes both. We look at the 12 candle window. That's the hour prior to the equity opens, the hour of the equity opens, and the hour after the equity opens. That area, the 80 to 90% of the time, is where a very good trade setup may occur. Now, obviously, we do have trades that occur outside of that window, and they are fantastic trades. Sometimes the market will take 3 hours to set that particular move up before they shift the market or continue that move. But for the most part, that 12 candle window can allow us to have laser-like focus, and we're going to talk about the end and beginning of the hour within that 12 candles today. Then we look for price to confirm. We're going to talk about having extreme focus for just even 1 or 2 setups. Obviously, there are lots of different types of ways to enter the market, but we'll look at an example of when you focus and can only enter the market with a couple of types of setups, how that can take stress off you to step back and observe the market more from the outside perspective, to put a little bit more focus on just timings, levels, fighting for the best price, asymmetrical risk reward, placing your stop in place, and setting a target, and then being comfortable and confident that you can walk away from the screen and let the market run its course. Again, risk management and profit targets, how it's so important to be cutting losses and how it's so important to set profit targets in a lot of cases to ensure that you're taking money off the table. If you're trying to make those decisions in live time, often we will allow emotional criteria into the equation, which will interfere with us making a rational, process-oriented decision to exiting that trade. Trade management can involve a lot of criteria: when to go to break even, when to exit the trade if it hasn't hit your particular profit target, how long will you wait in a trade before you will exit if it hasn't done what it's supposed to do. Little criteria that will ensure that you can squeeze the most out of a winning trade and cut your losses short if that market is indeed going to move against you prior to hitting your stop. And then also reviewing your live performance. There are a lot of things we've talked about in other videos that the market will do to you even when you're in the right direction of where that market is headed. It will do a lot of things to shake you out, to get you to second guess your trades, to scare you out of a winning position, to scare you out of to scare you into going to break even too early, to trailing a trade, stopping you out for a lot less than what you may get if you held on to that position. Just little things that they will do in terms of flashing price, moving the number icons on your platform super fast, widening the spreads, pumping price, holding price for a long extended period of time, and coming back and tapping your entry price level again to shake you out of a winning trade. So today we're going to be talking about developing extreme focus for one good trade. This comes back to building your playbook and knowing all the subtle variations and nuances of the types of trades that you are looking for. Now, we have put different types of price action patterns into our equation, and we will go through some examples today on the charts from last week and today that if you just look for a couple of different price patterns. Now, I'm not saying these are the only patterns. The example that I'm trying to paint today is that if you took a couple of basic concepts and tied them in with our other information in terms of structure, high and low equity opens, round numbers, our 12 candle window, how these trades show up all the time, and then of course the subtle variations of how price will present, but essentially it's the same thing. It might be a 3-bar pattern, it can still be a 2-bar pattern, but a subtle variation. The types of scenarios that can occur, whether it's at numbers or at the high or low of the day. We may have a 50 pip target in place for a long trade, but it may hit the high of the day just below numbers and stop there for 40 pips. The things that you need to learn from each and every trade. So again, I've talked a lot about the hour phenomena, and I'm going to go through some examples of last week and yesterday. If any of these particular, if we had a pin bar hammer or an engulfment pattern that was at numbers or at the high or low of the day, that these particular candles were either the end of the last 15-minute candle of the hour or the first 15-minute candle of the hour, to see if just keeping things that structured, if you were a computer algorithm, if it was that programmed into your mentality that that was the only types of trades you could take, and that's all you focused on was the last and the first candle of the hour to be at numbers after it had consolidated for a move in the opposite direction or a continuation of a move in the direction of the trend. If that was all that you could take, how many trades could we have gotten last week? So we'll look at a couple of examples of just I call this a type 1, where it's a pin bar hammer, a stop loss above the bar, or an engulfment short. Type 2, stop loss above the bar. Same thing for the reversal in the long direction for 50 pips. Now, the reason I'm using this as a sort of a model is that sometimes when you strip things back and make it that crystal clear, it becomes that much easier to forget about looking for all these other things and using all these other indicators. And you'll notice that a lot of the Asian session is designed to create a trading range, but also to trigger technicals in one direction. And many of you have seen this now, that almost every session If you're in profit in the London session, the New York session will come back and stop you out. Or if London and New York trade in a range, one of those eventually will be stopped out for a 50 or 100 pip move. So it's important, again, just to go back to basics, and really important if you're in a trade to be making sure that you're taking money off the table. So we'll look at a couple of examples today. Again, just pin hammers or engulfments, type 1, type 2, 1 bar stop at the high or low of the day or at round numbers, and only the last or the first candle of the hour inside of that 12 candle window. Now we'll look at a couple of examples where that fell outside of the window as well, but if we were that extreme in our focus for just one good trade, how many times could we have participated in trades last week, and how would we have done? So let's take a look at that. I just want to say before we jump into the charts, I really appreciate all the feedback. I've had at least 50 or 60 emails in the last 2 days, so I'm slowly chipping through. I apologize about the delay. I appreciate all the likes, and I appreciate all the support and comments. I'm going to keep trying to chip away at a lot of the content questions that everybody keeps, they've sent a lot of questions. But again, just to reiterate for people who are jumping in now, everything we go over every single day is the same thing, because it's if you master the basics, there's more than enough trades for 50 pips at least once a day, if not every session. And if you master those and you can improve upon your execution and following your trading process, and then gradually scaling that up and continuing that consistency in your results, you can keep scaling that bigger, doing the same thing over and over again. So stay disciplined, traders. Keep it super simple so that you can replicate those results. This addresses pretty much every component of our criteria in our simple trading model for 50 pips a day. So let's take a look at some chart examples.
Good day, traders. Continuing our discussion on developing an extreme focus for one good trade, and just looking at a couple of criteria that we talked about in terms of pin hammers, engulfments at numbers or the high or low of the day. And particularly if we just focused at the end and beginning of each hour, just for the simplicity of rotating that hourly cycle. If we were on an hourly time frame, we find that just looking at some examples of these trades last Friday, April 17th, we had on the pound New Zealand, the type 2 engulfment at the high of the day within our 12 candle window. That trade engulfed at the high, went sideways, gave a pin hammer at the double zeros for a 50 pip move down. Now traders may have missed the original engulfment, but they could still fight for either limit ordering the low of that bull candle at the high, which was the last candle of the hour, and the bear candle was the first candle of the hour. And at that point, traders can fight for the best fill possible, either just trying to not pay the spread or fighting for a limit order up top or getting in at numbers. And then either following that trade through past 50 pips for squeezing as much as you can out of that trade, or just setting the preset target for 50 pips and exiting the trade. And when we entered into the very beginning of our next 12 candle window in the US session, we had a very similar type 2 engulfment again at numbers as the last candle of the hour on a breakout pullback re-entry type of scenario in line with the already moving downtrend. That trade also gave traders their 50 pip target. It moved 87 pips from entry to low, whereas the one above moved 100 pips from entry to low. So again, just to reiterate, sometimes being patient. If this trade was on Friday, if you were patient all week just waiting for one simple trade and developing that extreme focus to be patient, how often there are some of our best trade entries occur over and over again. Now this is just taking one day and looking at it. If we went to the following Wednesday, the Wednesday prior, again, just looking at the first and last candles of the hour, we see that the market had a breakout pullback, not quite a full engulfment, but we had a continuation off of numbers in Asia. That market didn't quite move, but it moved 50 pips before it consolidated. Again, that market came off of numbers, and it was basically a 3-bar engulfment with the existing breakout pullback. And we went to the London session, and we have an open drive candle at the end of Asia, which then gave us a pin hammer on the first candle of the Europe changeover, which went straight up through the numbers. Now that market didn't quite go the full 50, but it went through the numbers for 40 pips before it reversed and came back to stop out traders who were long off the continuation from earlier in the session. But the point I'm trying to make is just these pin hammer engulfments. They occur all the time. We had a pin hammer at the high as the last candle of the hour at numbers after the Europe Open, heading into the London Open for 50 pips plus, back down, stopping out traders who were long. As we headed into that crossover, there was an entry that happened for traders in between the gap session. That market, again, if we headed into the next session, traders who were long still hadn't been stopped out. So that continuation, again, an open drive candle in the first bar of our 12 candle window heading into the US session, gave us an entry, again, similar to the one earlier where we had the open drive candle, then a pin hammer coming off of numbers in line with the existing trend. And then, of course, heading to the high of the session at the end of our 12 candle window, we have a 3-bar reversal with pins, a pin hammer for the short, moving 100 pips down. Now this, again, going back to our big picture, our structure, our high of the day, low of the day, our 12 candle window, our numbers, our pin hammers for price entry confirmation, and again, paying attention to who's in the money, because when you're in profit, these markets are going to come back to stop hunt profitable trades, and that's really important, especially when you're looking at the 12 candle window. Again, these are first and last candles of the hours. So again, just thinking in terms of common sense, if an hour chart is going to reverse at a high or at a low, chances are it's going to, if a bear candle's down low reversing into a bull candle, it's going to be the last or the first candle where we see that reversal pattern show up on the 15-minute chart, and vice versa for short entries. Again, just looking at the previous Tuesday, same pair. We have a bull hammer off of numbers in our 12 candle window. Last candle of the hour, first candle of the hour. That trade went more than in excess of 50 pips with an existing breakout from the Asian session. Breakout, pullback, pin hammer. We go into the US session. We have an engulfment heading into the session, and then a bull hammer engulfment crossing into the next 50 box zone in line with our existing trend for a 50 pip move up. So yes, outside of our 12 candle window, another example, engulfment, a hammer, double zeros for 50 pips again. So I'm just trying to paint the picture that if you just focus on a couple of simple setups, how often these trades occur, irrespective of other information that the news may have, or that the chatting heads will be talking about on the news box, or what your strength meters are showing you, or anything else. Stick to price, stick to things that you can duplicate over and over and over again, and narrow out all the variables and just focus on simplicity. Keep it simple, traders. Stay disciplined, stay focused. Have a great trading day, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.